Hi there, welcome to Kneppyinvests. It seems like a bit of a tradition, sort of like a ritual, if you want to call it that, that I do a SelfWealth Appendix 4C video every single quarter. I have never been a shareholder of SelfWealth, and more than likely, I will never be a shareholder of SelfWealth. Now, for full disclosure purposes, for those who don't know what SelfWealth does, they are an online share trading platform. I did transition from using CommSec because they have $20 fees to SelfWealth because they have $10 fees. And now I'm transitioning to Superhero, who have $5 fees. And more than likely, and this will happen at some point in the future, as soon as $0 fee platform comes along in Australia, I will transition to them. I'm all about the fees and saving money. Now, some people and investors out there would have a little bit of problem transitioning from SelfWealth, CommSec, one of those other trading platforms to Superhero, because Superhero is not CHESS sponsored and you don't have a HIN number or HIN number. I have no problems with that. I'm all about saving fees, and this is the best way to save fees. So I am not loyal. I'm not the sort of loyal customer that maybe SelfWealth, CommSec is looking for. My loyalties are easily transferable. Now, that's not the reason why I have not invested in SelfWealth and more than likely will not invest in. Now, if there is an opportunity in the future, particularly around the valuation of this company, I will look at investing or putting some of my money at play. But at this point in time, the chart looks ugly. The financial state of this company looks ugly. And you really have to put faith in Kath Whitaker, who is the CEO of this company. She's been the CEO for about 1 year. And I think you really need to believe her vision, because this company has gone from being operational cash flow positive to being highly operational cash flow negative because of her vision. They are doing some exciting things. And I think we're going to have to wait a few years before we realize whether Kath Whitaker's vision has been or is successful or is going to burn in flames. So before we have a look at SelfWealth's Appendix 4C for the March quarter, just a few facts in regards to the company. We'll also have a look at the half-year financial numbers. SelfWealth is an online share trading platform founded in 2012. I can't believe SelfWealth has been listed on the ASX for 4.5 years, listed in November 2017. I thought it was actually a little bit earlier than that. Maybe it was 2016, but I could be wrong with November 2017. Kath Whitaker, I've already mentioned, she's the CEO, has been the CEO since April 2021. So she's had or just about to have her 1-year anniversary. And the market cap of SelfWealth, $50 million. That's a share price of 21 cents. In fact, with Kath Whitaker's reign as CEO, we've just seen a share price plunge about 75% because the share price high in this company was reached in February 2021, so just after 1 year ago. So it's fallen from 80 cents to a current share price of 21 cents. Market cap of 50 million is starting to look a little bit more attractive. Not only is the market cap 50 million, enterprise value is actually 35 million because they do have $15 million of net cash. And the T code for SelfWealth is WSF. Now, in regards to the half-year financial numbers, comparing to the half-year financial year 21, which is in the brackets here, revenue has grown from 8.4 million to 9.9 million. So the first thing I always look at when I am looking at the financial state of the company is to see if revenue or cash receipts is growing through time. That is box number one that I want to see ticked. If a company can't grow their revenue or cash receipts through time, that's a massive red flag for me and my investing philosophies. Now, SelfWealth was operational cash flow positive in the half-year financial year 21, and they're only loss-making by 400,000. Unfortunately, this company is starting to spend a lot more because of Kath Whitaker's vision, and they are now operational cash flow negative and unprofitable by more than $2 million. At the end of the half year, they did have $15 million of cash, but because this company is burning through a lot of cash, the cash levels have fallen since the end of the half year, which was the end of December. So we're now into April, and you're able to see the cash levels when we look at the Appendix 4C for the March quarter. And the price to sales ratio, 2.5, not too stretched. Now, with the enterprise value of 35 million, which was at the end of the last half year, price to sales ratio of 2.5, those valuation metrics do look quite attractive for the potential of this company. So right now, the market is discounting, in my opinion, SelfWealth. But there's a lot of negative sentiment around this company right now. Simply, the share price has fallen 75% in just over 1 year. And there is potential, there's more to go when you're talking about the share price dropping. However, we'll have a look at the chart later. Share price has been going sideways over the past 3 months, which could be a good sign that the bottom of the share price has been reached. We need confirmation that it has been reached at this point in time for me to get excited about SelfWealth. The other thing for me to get excited about SelfWealth is they become operational cash flow positive again, and we start to see growth in the cash receipts. We'll have a look at the cash receipts history in a few slides, and that is a one concerning thing. Over the past 5 quarters, cash receipts have gone sideways. So this could be the beginning of a trend in the cash receipts, not a very good trend in the cash receipts, because we want to see cash receipts climbing consistently through time. But I'll talk about that when we look at the cash receipts history. Before we turn our attention to the most recent Appendix 4C, which is the March quarter for financial year 22, I'm going to go back 1 year and look at the March quarter for financial year 21. And to be honest with you, this was SelfWealth's best quarter. This is when the share price did reach a high, or just after the share price did reach a high of 80 cents in February last year. $5.8 million of receipts, which was a record quarter for the company. And SelfWealth was operational cash flow positive by $558,000 in this particular quarter. And then Kath Whitaker became the CEO, and this company really ramped up their spending. So not only was this a record quarter in terms of cash receipts, they were operational cash flow positive. They didn't spend a lot of money in financing and investing activities. That meant the cash on hand actually grew from 7.3 million to 7.4 million. So I thought this could have been the inflection point for SelfWealth. If they maintain being operational cash flow positive, they could use a cash generating operations to grow the company in the future. So let's have a look at what happened over the next year to see how Kath Whitaker has done as a CEO, to see how this company hasn't turned things around. It's actually done the exact opposite, and how this company is starting to spend a lot more money to hopefully grow in the future. The first negative thing we see as we look at the March quarter Appendix 4C, operational cash flow or cash flow statement, is that receipts from customers actually fell from 1 year ago from 5.8 million to 5.4 million. So receipts down $400,000. Product manufacturing operating costs actually did fall by $500,000. But this company has really ramped up advertising, up $550,000 in 1 year, and staff costs up $1.7 million in 1 year. Administration costs up only $60,000. So this company has really ramped up the spending on advertising and staff costs. I am concerned about the staff costs. I would prefer to see that or increase in spending to be advertising, product manufacturing, those sort of things, not staff costs. So that is one concerning thing for me. So overall, receipts up or down $400,000, but spending up by more than $2 million, or maybe not $2 million, we'll say just shy of $2 million. And that means the company has gone from being operational cash flow positive by nearly $600,000 to being operational cash flow negative in the 1 quarter by $1.8 million. In fact, year to date, the company is operational cash flow negative by $5.3 million. And because they are spending a lot more money now, they had to do a capital raising in the September quarter. They raised $11.7 million in that quarter. So that means the cash on hand actually grew from 1 year ago to this year. In fact, it's grown to 13.1 million. But during the quarter, the cash on hand fell from 14.9 million to 13.1 million. So even though the enterprise value was $35 million at the end of the last quarter, it's actually now fallen or risen to 37 million. So this company is continually burning cash. And if they continue to burn cash over the next few quarters, the cash on hand will continue to fall. But they still have a lot of room to maneuver over the next few quarters because of the cash on hand. So no threat of any capital raisings in the near future unless they do a major acquisition. Now to some interesting metrics in regards to SelfWealth, looking at the active traders and also the quarterly trades. I might touch upon client cash as well. But the first interesting thing here is active traders continue to increase. In fact, active traders has increased 44% over the past year from 86,000 to 123,500. In the past quarter, it's actually grown 5%. The problem SelfWealth is facing, and maybe some other platforms is facing, is even though active traders is increasing, we're just not trading as much as we used to or over the past few years. In fact, in the quarter or third quarter of financial year 21, there was 514,000 quarterly trades. In the most recent quarter, only 380,000. So the trades or quarterly trades has fallen 26% over the past year. In the past quarter, from the second quarter to the third quarter, the quarterly trades has fallen another 10%. We're just not trading enough. I have heard that a lot of traders or a lot of investors are moving a fair bit of their money to cash because they are concerned about the valuations right now. So that could be one of the reasons why we are seeing falling trades. So it's something to keep in mind when you are, or if you are thinking about investing in SelfWealth, that their results, their quarterly cash flow is highly dependent on the amount of quarterly trades. And funny enough, what would help SelfWealth is a major correction in the market like we saw during the COVID-19 financial panic. That would get the market reinvigorated and excited again. And that would see quarterly trades increase and potentially even active traders would increase as well. One thing I always look at for any company, not only SelfWealth, but every single company I am doing research on is look at revenue or cash receipts history. Now, because SelfWealth releases quarterly updates, we have receipts history, which is a good proxy, a good enough proxy in my opinion, for revenue. If a company just releases half-year and yearly reports, like most of the mature companies on the ASX, I do look at revenue growth. I want to see revenue or cash receipts growing through time. It's the first thing I always look at. And with SelfWealth, if we go back to the March quarter 2017, receipts have grown through time from 40,000 to 5.4 million. That's a really good growth in receipts. But you'll notice that the biggest growth in receipts happened during 2020, during the COVID-19 financial panic stage. And over the past 5 quarters, receipts have gone sideways. After the record quarter in the March of 2021, receipts have just gone sideways, trading between, or we're seeing receipts trading between 5.1 million and 5.8 million. So I want to see receipts get above $6 million. That would confirm to me that the uptrend in receipts is continuing. If we continue to see receipts hovering around 5 to 5.5 million, that would be actually confirmation to me that this company has hit a bit of a roadblock moving forward. And that is actually a bad sign. And maybe that's one of the reasons why the share price of this company has fallen 75% since its high in February 2021. Now let's have a look at the chart for SelfWealth. This is the daily chart going back to late July 2020. The reason I want to go that far back is because the share price reached sort of a double top at 80 cents in August of 2020 and then reached that 80 cents again in February 2021. And when it reached that high in 2021 in February, it was on the back of the half-yearly report. Now, initially, the share price did open at 80 cents. And then during the day, the share price fell from 80 cents to 66 cents. So even though initially the market was excited about the results, those who delved a little bit deeper into the half-yearly results found something they didn't like. And that's why the share price fell 20% during trading that day and overall fell 19 or 11% on that particular day. But that was the catalyst behind the change in sentiment in this company from at least neutral or positive to negative. And ever since the half-year report in 2021, the share price has been falling and is in a well-defined downtrend. The reason I'm saying it's in a well-defined downtrend is I've included the two moving averages, the 50-day and 100-day moving average. I also look at 25 and 100, 200-day moving averages, but I just want to focus on the 50 and 100-day here. Both moving averages are going down. Not only that, whenever the share price moves towards the 100-day or even the 50-day moving average, there's a lot of pressure on the share price. So those two moving averages are serving as nice resistance levels. Now, over the past 3 months, actually, before I get to that, now, when the company did release Appendix 4C in July last year and January of this year, the market did not react to those Appendix 4Cs very well. In July last year, the share price fell 12% and kept on falling over the next month. And in January this year, on January 17, share price fell 10% on that day, and then another 7.7% the next day on January 18. So both occasions, the market did not like the Appendix 4C. However, in the most recent Appendix 4C, released on April the 13th, share price rose 10%. So the market did not like this quarterly report. The market actually liked it. But that was or is not the catalyst behind a shift in sentiment in this company, because the share price has just been going sideways over the past 3 months, trading between about 18 cents and 22 cents. So the share price is consolidating. The one thing I don't know right now is whether this is just a consolidation period before the next leg down, or if this is a consolidation period where we have seen the share price reach a bottom and the next leg is a breakout to the upside. Ideally, I'd like to see a breakout to the upside coinciding with some good financial news from the company. So at this point in time, and this is just me, you don't have to do this. If you are very bullish about the future of this company, now could be a good time to buy in. But what I would do is just wait for confirmation that this is a consolidation period leading to a breakout in the share price. So I'd be waiting for a breakout to the share price. And hopefully that would be coinciding again on some good positive news. That's all I have for this Appendix 4C March quarter video for SelfWealth. If you do have any questions about this company or any other company that has released an Appendix 4C for the March quarter or Appendix 5B or is about to release one in the next few weeks, I'd love to hear your thoughts, your questions, your comments. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.